It might help if I was off of mute. Good afternoon, everyone. We're going to give it a couple of seconds while everyone comes in, and then I will be back with a quick intro and we'll dive into the content for today. So again, let's give it a couple of seconds so everyone can come in. Thank you. All right, it looks like our numbers are starting to steady a bit. Give me a couple of seconds and I will go ahead and share my screen. I'll be joined shortly by my colleagues GB Bajaj as well as Mike DiDonato. So we'll get through this intro and then again, we'll dive into the content. So give me just a couple of seconds. All righty. All right, so let's jump in. Good afternoon. My name is Lauren Simpson, and I'm with the SBDC, or the Small Business Development Center. We're a national program with over 1,000 locations across the country, and we offer no-cost services to local small businesses. Now, our services are at no cost to you, so no cost to local small businesses, because your tax dollars have already taken care of our fees. For the Los Angeles network, we have several locations throughout the Los Angeles, Santa Barbara, and Ventura counties. And you can see those represented on the map in front of you. You'll see that we're in Camarillo, as well as Santa Clarita, several locations in Los Angeles, Pasadena, Laverne, Torrance, and then all the way down to Long Beach. And as I mentioned before, we offer no-cost business advising. So part of our services include advising by business experts, so content experts, those topics ranging from marketing, taxes, licensing and permitting, honestly, you name it. And we've got someone or an expert to advise you on that topic. And then we also offer virtual training sessions. And so those are comprehensive workshops that'll help you and your business adapt as well as grow. So please be sure to get in contact with us today. Again, we are here to help and look forward to connecting with you. You can give us a call at 866-588-7232, or if you prefer, you can go online and go to smallbizla.org/new client. Now, if you have joined us and you're outside of our service area, so your business is not located within the Los Angeles, Santa Barbara, or Ventura counties, then you can go to americassbdc.org/find-your-SBDC, and you'll be able to find a center in your area. I'm going to quickly stop my screen share. Looks like a few more of you have joined us, so welcome, welcome. Quick housekeeping, let's be sure to put all questions into the Q&A. Again, questions into the Q&A, and then we will reserve the chat for any comments or any links or any information that Mike or GB would like to share with you. And so with that, we're going to pause for a sec while Mike and GB connect. Thank you so much. Actually, let me ask you all really quickly, if you could put into the chat, could you tell me what topics you guys would like to cover going forward. Maybe you can drop that into the chat. Again, just trying to see, as Mike and GB cover tons of topics, it would be great to hear the types of topics that you would like us to cover. So go ahead and drop that into the chat while Mike connects.
Hello, I'm here. Good to see everybody.
Hey, Mike, how are you? I just went through the chat and I just went through the intro, and then I just asked the audience if they could let us know if there are any topics that they'd like us to cover going forward.
Yeah, please do. It's important for us because we want to cover the topics that you want, that you're interested in, and what are your challenges. It'd be also good to let us know what are your existing business challenges, your biggest challenges, because then we can kind of cater the presentation to what you need. Hi, GB, how are you? Oh, GB's trying to connect in.
Oh,
there.
Thank you.
So I believe today GB is going to be talking about how to revive an entity, dissolution of an entity, and sometimes you do have to dissolve an entity. And there's particular ways you have to do that. Oh, chat is disabled. Are you aware of that, Lauren?
I am not. Oh, let me see.
Thank you for sure. And while Loon, you want to know how to file tax for foreign income. I'm not sure how many people have that issue. Maybe that's a topic that GB can cover. And it seems like he's having trouble logging in. So if that's the case, let's go ahead and have you put in what else, what other topics you want to cover. There's all sorts of tax topics, right? There's credits, social media marketing. Oh, that's one for Lauren. Okay, Lauren, you're gonna have to put a presentation together for social media marketing. And it's a good one, it's important. What else do you want to see? We can talk about funding. I have a entire content library, various topics. I think next week we'll talk about SBA loans and those types of things. GB, can you hear us? Are you on? Still muted. So GB is having some technical problems. Let's take a few more. What else do you want to hear about? Do you want to hear about human relations? Do you want to hear about employee issues? There's all sorts of rules relating to employees. Just tell us what it is that you're facing in your business. How to increase your sales, we can talk about that. Okay. Insurance. Oh, okay. That's a good one. I think GB can provide some information on that as well, as can I. We're not insurance brokers, but we can certainly provide information on insurance. Keeping in mind, there's all sorts of different types of insurance, right? Workers' comp, employers, insurance, D&O, as well as product liability, general liability. So that's a big topic, but we can certainly cover it. How about retirement plans, 401ks, ESOPs, those types of things. 7A. So I do have a presentation on 7A. GB, can you hear us? No. Since GB can't hear us, I'll go ahead and bring up my presentation on SBA, basically on financing. So 1 minute.
Hey, Mike, it looks like we have someone interested in employees hiring coverage.
I'm not sure what they mean by hiring practices.
Hiring practices.
I'm not sure what's meant by employees hiring coverage.
Yeah, Rhonda, go ahead and add another note for us. Let us know what you mean by hiring coverage. I do see that you put employees as well.
Right. And there are certain definite hiring practices that you need to be aware of so you don't get in trouble with the federal government and with the state of California. Okay, so 1 minute while I go ahead and search for. GB, you're on. There you are. There you are. We can't see you.
I'm having some tech issues today. Let me see if I can correct in the next minute or two. If
Sure.
not, then you may have to do a presentation. I know you always have a back pocket presentation, so
yes,
give me another minute, please.
Sure, no problem. While I was doing that, is it worth keeping an LLC for a small business in Amazon retail? Is it needed if you have product liability insurance? Well, it depends. Okay, we can't answer that question without knowing more detail. How much revenue you're generating from your business? What is it you're selling on Amazon? You know, how many employees do you have, et cetera? What are you paying for product liability insurance? That's a question that requires a one-on-one session. Okay.
Hey,
Rhonda.
Mike.
Yes.
Oh, So Rhonda's is a follow-up to her initial when she said hiring coverage, that her follow-up is, what do we have to cover for employees?
Still not sure what that means. Are you talking about laws in relation to overtime rules? Are you talking about workers' comp insurance? I'm not sure what that means. So a little bit more definition.
Yes.
Oh, she's saying yes. Okay. All right. Yes, we can cover that. GB, I don't know how you're coming along. If you can't get to where you need to be, I'll bring something up. So bear with me.
It looks like my tech is not cooperating today at all. So I will have to bow out. I can do the presentation next week, Mike, if you can take over for today, please.
Sure. I'm also trying to bring up
I
the
cannot hear you.
presentation
I can read your lips. I think you said yes.
Yes, we're good, GB. Okay, we're good. All right.
Thank you. I saw the thumbs up.
Okay.
See you guys next week. We'll talk about the LOCs and the liabilities, if it's worth it or not, and how to exit an entity if necessary. So we'll talk about that next week.
Okay, great. Terrific. And by the way, exiting company, that's another topic we can cover. So I'm going to start to share my screen, and we're going to be talking about how to finance your business, access to capital. Can you see me? Can you see the screen yet? Hello?
I see that you're trying to share, but I don't.
We're having technical difficulties here. So one more time, let me stop the share.
There it is. I see your desktop.
See the desktop. Okay. Again, we're having technical difficulties, so please keep the questions coming in. I'm going to try that again. And I might have to talk verbally through this presentation if this doesn't cooperate today. There we go. Can you see it now?
Yes.
Okay, so this presentation was put together by my colleague, Larry Johnson. He's a former investment banker. He's now one of our key SBC advisors. He works out of multiple SBDC centers, and he's a terrific advisor. So I'm going to go through this, how to fund a business, all sorts of ways to fund a business. We're going to talk about this in overview, some detail, but for your specific business, we need to have a one-on-one session with you. Okay, so where do you start? Your own savings, cash flow. If you're a startup, you go to friends and family as well. Maybe use credit cards. Bad idea. Bad idea. If you're already in business and you need money, you might go to your bank because you already tapped your friends and family and your credit cards and your savings. But if you go to a bank, they may turn you down, as some of you may have found out, because you don't have sufficient cash flow, you don't have collateral, or they just don't like that particular industry, et cetera. So then you turn to alternative lenders. That's how it works. Now, what are alternative loan programs? There's something called microfinance. Microfinance came about in the 70s. And what that means is it's small little loans provided to businesses. When I say little, I mean it could be really little, to help businesses start and grow. And there are lenders out there that will help you do this, most particularly in the crowdfunding space. For those who have not been engaged in crowdfunding, who haven't participated in a crowdfunding platform, it's something you need to seriously consider. Because even for businesses that are doing millions of dollars, they still turn to crowdfunding. Crowdfunding brings in billions and billions and billions of dollars every year to businesses and to organizations and to individuals. GoFundMe, that platform alone, has 50 million donors. There are 18 million backers on Indiegogo, something like 15 million on Kickstarter, or vice versa. And the crowdfunding platforms keep growing and growing and growing, and they become more specialized. And we have an entire presentation just on crowdfunding that we can go through. Now, let's go back to this topic. A little bit of microfinance came about in the 70s through this gentleman. His name is Muhammad Yunus. He's a banker in India. He went around to villages in India and he saw groups of women weaving baskets, making handcrafted goods, that type of stuff. Excuse me. And he asked these groups of women, what do they need to help grow their businesses? And they said, we need little loans. Maybe at that time it was $50, maybe it was $100. I don't know, it's back in the 70s. But they were relatively small loans. But it helped those women tremendously. And he basically got all the money back, paid back. It was almost 100% repayment rate. It worked really, really well. He's still around. And the bank is called Grameen Bank. And Grameen Bank is now throughout the world. There's a branch here in Los Angeles. They only loan to women. It has to be a cohort of 4 women, by the way. And it's still small little loans. And they don't have the traditional requirement, how much collateral do you have? You know, what's your credit score? Because it's 4 women come together and they're there to help you out. And he is a very well-known banker and generated a lot of acclaim for his work in this microfinance arena. And so if you have a group of women that want to get a small loan to grow their business, you might check out Grameen Bank. Now, leaving that aside, there are a number of organizations that are around that can help business owners get loans. For example, there's the Opportunity Fund. I've met with the leadership of the Opportunity Fund in the LA area a couple of years ago. What they do is they will go and help small business owners get loans that wouldn't otherwise be qualified with a traditional bank. Because what they do is they look to say, well, first of all, I have to be operating for a couple of years, like 2 or 3 years. I'd like to see that. And their terms, are a little bit more flexible than a traditional lender. They'll go ahead and look at your entire situation. Let's say you're a contractor. And they'll say, okay, you have income coming into the household through various means. Maybe you're undocumented. I didn't say that, but we'll consider you. Okay, we'll think about it. And you might get that loan. Now, quite honestly, they don't like construction. They got burned 10 years ago, so it's been a crisis. But they like food. And they're really there for small micro businesses that need a little bit of money to grow. And we can introduce you to the Opportunity Fund. PACE, Pacific Asian Consortium and Employment, wonderful group. And I've helped people get loans through PACE that wouldn't qualify through traditional lenders. And it's more than just SBA backed loans. They have their own means of determining whether or not they should give a loan to you. Again, a little bit more flexible. Same thing for VEDC, Valley Economic Development Corporation. I'll talk about Kiva in a minute. Axion is like Opportunity Fund. I think they recently merged, by the way. Axion was focused on businesses in Latin America, Mexico. Again, these people are there to help small business owners, maybe from different ethnicities than Caucasians, get the loans they need to grow their businesses. Now, and they're all nonprofits, by the way. The Jewish Free Loan Association is a wonderful group. We refer a lot of people to JFLA. The JFLA is available to people who live in LA County or Ventura County. They have numerous loans, not just business loans. They have loans for housing. They have loans for students. They have loans for in vitro fertilization. They're all 0 interest loans for business owners. You can get a loan up to $36,000 with no interest, 0 interest. You have to have 2 co-signers with good credit scores to get that loan in a business plan. We help you prepare business plans. We know the people at these locations. We have contacts at the JFLA in that place, et cetera. So talk to us. That program, the JFLA, is outstanding, and they'll help anyone. It's not, you don't have to be Jewish to take advantage of that nonprofit group. CDC Small Business Finance. So across the nation, there's something called Community Development Financial Institutions, CDFIs. CDFIs are basically approved by the SBA to help business owners get loans that they wouldn't otherwise qualify for through traditional lenders. We have, there's numerous CDFIs, but CDC Small Business Finance is the one I primarily work with here in the South Bay. And we, for a lot of people, the CDC Small Business Finance, in particular, to get loans to buy equipment or to buy a business or a franchise, or it's capital deployment. That's what it's really about. Now, I mentioned Kiva. Kiva is a micro-lending platform. You can get a loan up to $15,000, no interest. It's a crowdfunding platform. Now, in this situation, they want social proof. They want you to go out and contact your friends and family and gather in at least 10 who will give you a loan of $25. And once you've done that, you can go on the national platform. It is an outstanding platform. You can see there's 97% repayment rate. They're working in 82 countries. $1.8 million have made a loan on Kiva. It's meant for those populations have been traditionally, excluded from lending practices or VCs. I saw some facts today earlier. Less than 1% of VC funds go to African American women-owned businesses, which is wrong. Less than 1% of VC funds go to women-owned businesses. That's wrong, okay? That needs to change. By the way, most of the people that we go to that come see us would not qualify to get VC funding, angel funding. This is where they go to get the money. $15,000, no interest loan through a crowdfunding. I call this crowd lending campaign. This crowd lending, this crowd selling, this crowd raises, and this crowd gifting. Those are my terms. So GoFundMe is a crowd gifting platform. This is a crowd lending platform. It does have to be paid back, okay? Indiegogo, Kickstarter is a crowd selling platforms, okay? Start Engine, WeFund, Seed Invest, those are crowd raise platforms. The vast majority of people we see would not qualify for a crowd raise. Those platforms are brokers with the SEC, but there's a few. I mean, if you're in a situation where you think you get raised money through the selling of equity, then we can talk to you about helping to create a crowd raise campaign. Every one of the platforms, and there's over 3,000 platforms, fall into one of those categories: selling, lending, donation, or crowd raises. So if you want to apply for a small business loan, it gives you some advantages. You're not bringing in investors, so therefore you maintain control over your business. And the lenders have no say in your business so long as you continue to pay off the debt service, okay? They'll have something to say if you don't pay the loan, all right? But they're not entitled to your business profits, okay? And you will be required to provide, reports, sometimes quarterly, sometimes monthly, depending on the amount of loan. For a small business, yearly. And you get to develop a relationship with a lender which grows with you as you grow, which is really important. Early on, when you establish a business, you should develop relationships with an attorney, with a CPA, with a lender, with IT support, with a marketing agency, because you can't do it all. It's impossible. So the earlier you start those relationships, the better off you are. Now, you may switch those relationships around, that's okay, but you need to establish those relationships. And as you grow, they'll continue to support you. Disadvantage of having a loan. Well, first of all, I have to pay back, right? It has to be consistent. You can't be late. If you're late too many times, the banker calls you in or they come visit you and they start asking a lot of questions and it gets a little bit difficult. You might have to renegotiate the loan, take out a different loan. So you got to pay back, right? You need collateral. What's collateral? To buy an equipment, the equipment can serve as collateral. If you're buying a warehouse, the warehouse is the collateral, okay? But if it's just working capital is money you need to just run the business, you want to grow the business, you want to hire more people, you want to go introduce a new product, you want to go ahead and just buy more inventory, then you need working capital to run your business, okay? That's not collateral. So collateral is your personal assets. It's your house. It's your condo. It's the stocks and bonds that you own. Now, you're not going to pledge your retirement savings. That's a bad idea. And by the way, some people will draw from their retirement savings to fund the start of a business or put money into the business. Personally, I don't think it's a good idea. You should always talk to your investment advisor before you do something like that, because there's tax consequences of pulling money out of retirement assets. So it's a little bit risky. Don't do anything like that until you have a conversation with a professional tax advisor that understands the issues. You are required to put money into the business. It's called an equity injection. So you want to buy a piece of equipment, then you have to put up at least 10% for an SBA-backed loan. You want a working capital loan, or you want a loan to start the business, you have to have at least 20%, sometimes 30%. So no lender, no traditional lender is going to fund you 100% of your needs. That doesn't exist. And as always, you have to sign a personal guarantee. Don't ever think you're not going to have to sign a personal guarantee when you go traditional lender. That is always a requirement. I know businesses doing $100 million a year in revenue, and the owners still have to sign a personal guarantee. So don't ever think you're not going to have to sign a personal guarantee. That's always a requirement. That doesn't mean that the bank is going to foreclose on your house if you don't make the payments. You can always renegotiate. Very, very few defaulted loans go to that level. Very few. So before I stop, do we have more questions or comments, Lauren?
So we have a couple of questions in the chat. I think you already addressed the not having to be Jewish.
So one has to do legal structure in the Q&A. No, you don't have to be Jewish. And I'll address the legal structure question another time. Come see an advisor.
Okay.
Yeah. Municipal codes, again, come see an advisor. You know, that's a very specific question I don't know the answer to. Okay, so let me continue on. So the SBA lends to lenders.
Hey, Mike, there's an additional one that just dropped in from Cindy. Would this be a substitute for a hard money lender, REI?
I don't know who REI is, but you should never go to a hard money lender unless you're absolutely desperate. The interest rates are too high. There's factors. Let's segregate factors from hard money lenders. When people say hard money lenders, basically what they're saying, it's a very, very high interest rate. Maybe you've heard of merchant cash advances, MCAs, very, very high interest rate. If you can avoid merchant cash advances, basically they take money out of your business account every day because they're pulling money as you're getting money in from customers. And the interest rate is particularly high. Whatever you can do, stay away from MCAs, merchant cash advances. I don't recommend hard money lenders unless you're actually desperate because the interest rates are too high. So the current, interest rates are rising now as we speak, right? SBA loan, I think, is close to 9%. Okay, maybe even higher. So a hard money lender might be 15%, 12, 15%. Stay away from hard money lenders. That's different than factors. Factors will give you something between 80 and 90% of the value of the receivables that you have. And they'll pull it directly from your bank account to do it once a month. And sometimes it is important to have factors available to you because you need that working capital and you're tapped out on your credit line and your customers are paying you late. Okay, so factors do play an important role. Now, the SBA does not fund businesses directly, unless there's an emergency like happened during the pandemic, EIDL loans. That typically doesn't happen. What typically happens, they will lend to lenders like banks and CDC, CDFIs, and CDC Small Business Finance. is one of those CDFIs. We will help you do the loan packaging, and so will the CDFIs, so that it's approved by the bank and the SBA. And the SBA guarantees for 7A loans about 80 to 85% of the loan. So if you default on a 7A loan, the bank will get 80, 85% of the loans, 20, 75 and 85% of that loan, okay, from the SBA. If you go to a 504 loan, which is really being used for the purchase of property and equipment, or to do leasehold improvements, or to buy another business, it's a 90% guarantee. And CDFIs are particularly set up to help you with those types of 504 loans. So the SBA was established back in 1953 under President Eisenhower under the Small Business Act. And its mission is economic development. We, as the SBC, initially started 40 years ago, approximately. We're one of many programs that is paid for by a grant from the SBA, as well as paid for by a grant from the state of California, and supported by colleges and universities throughout the country. There's 1,100 SBC centers, okay? So the SBA has numerous programs. They have women's business centers and veterans business centers, and so on and so forth, all funded by your taxpayer dollars. That's why Lauren and I and GB are here for you, along with all the other advisors. So the SBA offers a guarantee to lenders. The SBA is not a direct lender unless there's an emergency situation like the hurricane in Florida, horrible situation. The SBA set up offices all throughout Florida, temporary offices to help people go and apply directly with the SBA for emergency loans for that situation. And as I mentioned, there's SCORE, which is Service Corps of Retired Executives. That's funded by the SBA, as is some of these other women's business centers, veterans business centers, et cetera. The SBA also helps you get certifications. What are certifications? Certifications are basically validation that you fall into a particular category, which will allow you preferences in certain matters, such as government contracts. There's 11 different certifications that I'm aware of. For example, there's a women-owned business certification. There's a veteran-owned business certification. There's a disabled veteran certification. There's an economically disadvantaged woman-owned certification. It's extensive. I had one woman come in office, African-American female disabled veteran. She qualified for all 11 of those certifications, and she knew it. And she went after every contract that she got, and she got every single one of them. There's a set aside under federal rules of 10% of funding for contracts let out by the federal government agencies, and there's numerous federal government agencies. Anyone that is certified has an opportunity to get preference for those contracts. And the federal government is the #1 buyer of goods and services in the world. If you're not involved in government contracting, I suggest to speak to us about becoming involved in government contracting. And if you get certified, it makes it even better for you. And that's the federal government. Then there's all the states and all the counties and all the cities and towns and all the districts, like the water district and the college district and the school districts. It goes on and on and on and on. So it might be quite helpful to you to participate in government contracting. You don't think, well, that's not for me. I provide a service. Well, guess what? All these agencies, all these governmental entities buy services too. So it's something you should consider. Come talk to us about it. So an SBA loan is a business loan. It's not a personal loan. We get this a lot. We're still getting this, Lauren. You know, is the EIDL forgivable? No, EIDL is not forgivable. It is not a grant. You must pay back that economic injury disaster loan. It's done through pay.gov. The PPP loans, if you applied for forgiveness, basically were grants. And I think Lauren mentioned previously about the California Dream Fund. That is a grant. You don't have to pay it back. You do have to pay taxes on it. You don't have to pay taxes on the PPP loans that were forgiven because Congress passed a special law about that. Okay, so the amount guaranteed by the SBA depends on the dollar amount of the loan and the specific program. Okay. So what are the benefits to borrowers? Well, through an SBA-backed loan, it provides financing to those creditworthy small businesses that would not qualify for credit through a traditional lender. And again, up to 90% financing, not just for commercial real estate transactions, but for purchasing of franchises and equipment and leasehold improvements. A lot of things you can do. Okay. It is full amortization, which means you're paying off that principal balance every time you're making the payment. Okay. There's no balloon payment due. So at the end of the term of that loan, you don't owe anything. It's like having a car loan, just paying off month over month over month until you own the car free and clear, or a mortgage. So to be eligible for an SBA loan, you have to be operating. You actually have to be in business. Now, we can help startups. That is possible, okay? It has to be for-profit, it can't be a nonprofit. You have to be located in the United States, which includes all the territories. It's not just the continental United States. If you're on Puerto Rico, you're gonna apply for an SBA loan, okay? There are size requirements. Typically, it's 500 employees or less, and up to like $50 million in revenue. And yes, we do help larger businesses that are generating tens of millions of dollars get SBA-backed loan. And you have to have a need for the credit, obviously. Now, what is not eligible for SBA loans or federal assistance in general, including us, okay? We will not provide support for life insurance companies or fintech companies or anyone lending. We can't do that under federal law. No illegal activity, I'll come back to that. No one engaged in gambling. So you want to set up a card room, you're not gonna be able to get a loan to the federal government, you're not gonna be able to get a loan to us, or we're not gonna help you with that business, by the way, and you're unlikely to get a loan through any state-sponsored agency, okay? No products of a sexual nature, no private clubs, can't get a loan, not this way, and no churches, no primary religious teachings, no one doing lobbying, can't do that. In terms of illegal activities, that includes cannabis. It is still illegal under federal law. So anyone growing cannabis, I have no problem with it. I don't know if anyone does, but under federal law, it's still illegal. You cannot get a loan through any bank at this point, okay, for cannabis or CBD. Maybe that'll change in the future. Maybe Congress will go ahead and allow that to happen, but it hasn't happened yet. So we don't loan direct to borrowers. We use a network. The SBA uses approved lenders. By the way, people confuse us with the SBA. We are not the SBA. We're an organization funded by a grant through the SBA and other means. So there are two types of programs, general programs. One's called a 7A program under the SBA, and one is a 504 program. And under the 7A program, there's numerous known products. And under the 504 program, like I said, it's meant for large capital expenditures. However, even under the 7A program, you can buy machinery and equipment. You can use it for working capital. You can use it for receivables and inventory. You can refinance existing debts. You can do it with leasehold improvements. You can go ahead and purchase real estate. It has to be owner occupied. And you do acquisitions. However, more likely, if you're going to do purchase equipment, buy real estate, et cetera, buy a business, you're going to do that under a 504 program, not under a 7A program. So the loan terms, well, it's based upon what you're doing with the money and your ability to repay it. So for a working capital loan, it could be up to 10 years, maybe 7 to 10 years for machinery or equipment, 25 years for real estate. And if you have multi-use purposes, then it's going to be a weighted average depending on what you're doing with the proceeds. Interest rates. So the federal government set something called an overnight rate. That overnight rate is used by banks to take money down from the federal government. And then the banks set a prime rate. The prime rate is the rate that the very large commercial institutions will charge companies to borrow. Okay, and then that prime rate will be, a spread will be added to it to determine what to be charged to a particular borrower. Okay, so let's say prime plus spread, the Wall Street Journal publishes a prime rate. They've taken, the temperature of the large commercial banks. This says it's currently 5.25%. No, it's not. That changed. This was created a number of years ago. Now it's more like 8%, 8.75%, something like that, because the federal government, the feds keep raising the rate because they're trying to tame inflation. And it's working in some areas and not working in other areas. The problem with the approach taken by the feds is that they're trying to deal with you're using demand tools to handle supply issues. And what I mean by that, the federal government can't control the supply chain. They can't force someone to make more oil. They can't force someone to make more product. So when they're raising the rate, they're trying to curtail the demand, but they can't do anything about the supply. And that's an issue that is a problem that needs to be handled through incentives for increasing the supply. You need both tools. So with regards to this, when their loans are $50,000 or more, and it's less than a 7-year term, it's the prime rate plus 2.25. If it's 7-year terms or more, it's the prime rate plus 2.75. Okay, and the rates are slightly higher for $50,000 or less loans, and it's something called a community advantage loan. I can't give you a list of all loans and explain them. There's numerous 7A loans, but keep in mind the rates keep climbing, so you need to keep your eye on the prime rate, and just remember there's always going to be a spread of 2 or 3 points through an SBA-backed program. I already mentioned about CDC CDFI, CDC Small Business Finance. It's one of those that we work with. It's certified by the SBA to administer 504 loans, primarily used for real estate, but can be used for other purposes. They're nonprofit entities, and their mission is to provide business financing for those who aren't quite strong enough for bank financing. And there's 260 more, closer to 300 CDCs in the country. There's a number of them in LA, or in the South Bay, and we know them, and we can help connect you with them. So the Community Ranchers Loan Program is offered directly through this CDC Small Business Finance. They offer it through California, Arizona, and Nevada. The loan ranges between $50,000 and $250,000. Vast majority of people we see, that's what they're looking for. They need somewhere between $50,000 and $250,000. They're not looking for $1 million. Doesn't mean we can't help you if you're looking for $1 million or more. We certainly can. Okay. Loans that are offered for startups, existing businesses, expansions, and business acquisition. And you can see here the rates. Prime plus 2 to 3/4 to prime plus 6. So if we're at a situation where the prime rate is almost 9, you add 6 to that. Now you're paying 15% for loan, depending on the negotiation with the CDC Small Business Finance, and it terms between 7 and 10 years. So there's something called the 5 C's, and this is important to know and understand: credit, cash flow, collateral, capital, and conditions. When a lender is looking at your loan, it goes to a committee. The committee is looking at all the information that you provide, and it's looking to see, are you creditworthy? You personally, there's no such thing as business credit. There's no FICO score for businesses. It's about you and the co-owners in your business. Anyone who has 20% or more ownership in the business. If you have a credit score of 500, you're not going to get a loan. It's not going to happen. Okay. There are alternative lending options, but not through a traditional lender. Typically, they want to see 680, 700 or higher for credit score. The lender will look at your cash flow, your historical cash flow, and your projections of cash flow, because they want to be sure that you're going to be able to meet the debt service. Okay. They're going to be looking at collateral, business collateral and personal collateral, which is real estate. How much equity do you have in your home? That's what they want to know. Okay. How much capital have you contributed into the business, and how much more capital can you put into this business? You want a $75,000 loan? Great, awesome. You need $75,000 to do something, buy a piece of equipment. You've got to put money into that as well. Maybe as much as 20%, maybe 10%. What are the conditions of the industry? What are the conditions of the business? 2010, 2011, difficult times for a lot of people. Industry, banks, lenders were not lending into construction. This is why some of the problems we're facing today. Okay. During the pandemic, lenders weren't lending to restaurants. So it's the conditions of the industry. And not just that, it's the conditions of the geographic area. It's the conditions of the market that you're in. There's a lot of things associated with conditions. Which one of these is most important? I can't tell you that. They're all important because you have to meet the requirements at each level. So let's talk about credit. Anyone with 20% or more ownership in the business has to have a good credit score, as do spouses of business owners, as do co-signers for the loan. And the credit score is determined by payment history, percentage of revolving debt available, which is credit cards, the length of your credit history, and the types of credit. Now, you all know about FICO scores. You can get your credit reports annually, once a year for free through annualcreditreport.com. And the FICO score consists of, I don't know, something like 100 different variables that they look at. FICO has never really released the algorithm they use to determine a FICO score, but it's extensive. Cash flow. So to get a loan, lenders will be looking at how much income is being generated by the business historically. If it's a new business, we're going to look at projections going forward. Plus, if you're existing business, they want to see your go forward budget. Okay. Plus, they're going to look at your personal income, your household income, all of your income coming into your household. Is there other employment do you have? Do you have other business generating income? Is there money coming in through your spouse? Are you getting a pension in some way, shape, or form? Do you have dividend income? Do you have rental income coming in? They want to see all of it because the lenders want to be sure that you can go ahead and pay back the loan. They're risk averse. That's the point. Then we move into collateral. So these are tangible assets that can be sold by the lender in the event the business is not able to repay the loan. Very, very few SBA-backed loans ever get to this point. Okay, but it does happen. So personal residence, right? How much equity you have in it? Business assets, inventory, equipment. Those are business assets. Vehicles, business assets. Okay, personal assets, personal vehicles, cash, stocks, bonds, etc., that are not retirement savings. Do not pledge your retirement savings, in my estimation, to qualify for a loan. In capital, how much money are you putting into this business for this project? Okay, what are your savings? What's your home equity line of credit? What type of contributions are coming in from partners? Can you get money from friends and family? And for a startup, there's a minimum of 20% injection coming from your own resources, friends or family, etc. Could be as high as 30% depending on the industry. For a business acquisition, it's 10%. Now, there's other fees associated with like business acquisition. Might have to hire a lawyer, for example. So it's more than just this 10% injection. What are the conditions? right? What experience do you have in the industry? So no lender's going to give you money if you don't know that industry. That means you have to have experience in the industry. And if you don't, then you need to bring in somebody who does, to operate it or as a partner, because the risk factor is too high. If you're going to go into a new industry, it's not going to work. They want to be sure that you have experience in that industry and what are the economic conditions. Like I said, during the pandemic, banks weren't lending to anyone for that matter, other than nursing staffing firms, for example. So the SBA works with local resource partners like SCORE. By the way, they're volunteers. SBDC is us, Women's Business Centers, Veterans Business Centers. We're all here to help you with your business, grow it, expand it, get the funding you need, marketing, sales, etc. Okay. So when you apply for a loan through a bank, a traditional lender, you need to provide a personal financial statement. There's a standard form. I think it's a 413 issued by the SBA that you need to fill out. It's what you own, what you owe, what your income is, and what your expenses are. And they want to know what your outside income is. They'll want to see at least 3 years of personal tax returns and your personal credit reports. And if the business is already in existence, they want to see 3 years of business tax returns, interim financial statements. They want to see projections, the business plan, not a pitch deck, a full-blown business plan, okay? Proof that money has been injected into the business from your personal assets, and of course, a loan application. This does not happen fast. It could take months to get a loan, depending on what type of loan you're going after. If you're trying to buy a warehouse, it could take months, because there also has to be a valuation of the warehouse. There has to be negotiations of the deal between you and the seller, et cetera. There's a lot of things that go into this. Don't think it's going to happen quickly. So we're here to help you. Come and see us so we can help you get the loan. So I'm going to stop the presentation. Lauren, I'll provide this to you. Let's see. No, and Lily, SBA loans are not forgivable. No. The only loans that were forgivable under the SBA program were the PPP, Paycheck Protection Program loans, and you should have already applied for forgiveness at this point. So SBA loans are loans. They are not forgivable. Let's see. Are there loans for real estate investing? Not through the SBA. If you want to buy a piece of property and occupy it to conduct a business, like a warehouse, then yes. Okay, what about money for housing? These are business loans, okay, Madam Lara, these are not personal loans. If you need money for housing, you have to seek other resources, like the Jewish Free Loan Association. They do have money for housing. Okay, any other questions? No. So with that, I'm going to conclude the presentation. Just keep in mind, there's a lot to this. And aside from traditional loans, there's the crowdfunding option and the Jewish Free Loan Association. We know how to work those options for you. Talk to us. SBA loan for vehicle for business use. You can get an SBA loan to buy equipment, and that includes vehicles, rolling stock forklifts, but it's done through your business. And the business will own the vehicle, not you personally. Okay, anything else coming in? Let's see. Okay, so that will conclude my presentation. Hopefully GB will be back next week. Lauren, thank you so much for your patience today, and thanks to everyone for their patience today. And we'll see you next week. Bye now.